Now this is my sixth accounting lesson, and I'm going to show you a general journal and I'm going to show you a general ledger. The reason why I'm going to do this is because I know there's a lot of accounting software out there these days, but when you're doing accounting, you need to almost understand how it's actually working. And this is the old way they used to do this stuff. And I know they don't do it like this anymore, but, well, at least most places don't. But a few places still do, unfortunately. And if you ever had to look up something in the historical archives, you may find something like this, rather than some computer program that you'd have to research. Because this has been like in the last 20 years. Let me tell you something. Some of these companies have records that go back 100 years. And I tell you, if you had to look at something like that, you'd be blown away. Anyway, this is a general journal. It says right here, journal right there. This is page 1. We're assuming at this point that we're going to start up a fashion business. Now, this business is going to be something where we're actually making clothes for customers. We're a manufacturing business. Okay? Well, Tom Jones comes around, and let's just assume this was happening 30 years ago instead of today. And he decided that he would invest $10,000 into building a fashion business. So he invests $10,000 and it goes into the cash fund. Now, there is a ledger. That's what this posting reference is right here. There's a ledger for cash. There's also another ledger for Tom Jones Capital. Now, the cash one will be ledger number 100, and the Tom Jones Capital is ledger number 300. And these ledger accounts track how each thing is doing. And I'm sure if you've taken any accounting classes, you know exactly what I'm talking about here. If not, I'll show you a general ledger in just a second and hopefully clarify this a little bit. But he's starting this business on January the 1st. Usually a manufacturing business can start anytime they want. When it comes to retail, it's better to start in July because it's warmer most of the time. But he's starting his manufacturing business in January, and when you're starting a manufacturing business, you can pretty much start any time. It's actually more convenient to start in January simply because you can keep your financial records straight. Okay. January 1st is when he starts. He has now put $10,000 in the bank for this business to start. So we have cash, which is account number 100, and Tom Jones Capital, which is account number 300. Cash gets debited $10,000. Tom Jones Capital gets credited $3,000. This is the double entry bookkeeping system that we have been talking about in previous videos. Alright? Then we have, he wants to rent out a building. This building will be used to manufacture his clothes. Alright? So, he takes $5,000 out of the bank. What he did was he wrote out a check for $5,000, and he gave that to the people to pay for the rent. Now, usually this rent will either run 6 months or a year. It just depends on the situation. This would probably be a year's worth of rent. Okay? And so therefore you have a prepaid rent account, and it is accounting ledger number 101, and a cash is 100. Alright? Now, let's say he went out and he went to buy supplies for his business, and it was going to cost him $300. Well, he didn't want to take a check with him, so he took his corporate credit card. Okay, he got a corporate credit card. So this is his accounts payable. That would be the corporate credit card. And here's his supplies. Supplies is 102. Accounts payable is 200. Alright, now he could have also worked out a deal with the people he was buying the supplies from, and they could have said, hey, you owe us in 30 days or 60 days or 90 days. It doesn't really matter. Okay? Now these are supplies he's going to use in his business to actually manufacture the clothes. This would be needles and thread and, well, material, that kind of thing. Anyway, Here we are, January the 5th. This is 4 days later. All of a sudden, he discovers he's got rats in his manufacturing business. Well, he can't have that because OSHA would be all over him. So he suddenly goes out, he hires an exterminator. The exterminator comes in, exterminates the rats. They charge him $100. Now, I know in this day and age that'd be unrealistic, but let's say about 30 years ago, it would have cost him $100. So we have a miscellaneous expense account. It is $555, and cash, which is $100. As you can see, cash got credited, miscellaneous expense got debited. Just like up here, supplies got debited because you now own $300 worth of supplies, and accounts payable got credited because you now owe these people $300. All right? Same deal with the prepaid rent. You've paid up $5,000. That means you are authorized to stay in that building for a whole year. You've actually handed them $5,000. Say, hey, you've got permission to stay in this building for a whole year. So you debit prepaid rent. That is something of value to you. And of course, you paid out $5,000 in cash to have that privilege, so that got credited. All right. Now you noticed here we had 3 transactions that involved cash. So where do we log them? Right here. As you'll notice here, we can go over here and we have a cash account right here. It's account number 100. This would be in a ledger. Okay, and the ledger would be super humongous. That's why they turned to computers, because they were getting sick and tired of having super humongous accounts. Alright, let's take a look here. January the 1st, posting reference is journal page number 1. If you'll notice over here, we had a general journal. It was the first page of that general journal. This is the day-to-day activities here. Now let's go back over here. We have account of cash. It's account number 100. This transaction took place on page 1 of the general journal. We debited this account for $10,000, so its balance is also $10,000. On the 1st of January, we go back to the first posting reference, which is the first page of the journal. We subtracted $5,000 cash for prepaid rent. So now, instead of $10,000 being in your cash account, you have now $5,000. Alright, do you remember the rats we were talking about? It happened on the 5th. We go back to page 1 of the general journal. We have $100 that was credited to cash. So now, instead of having $5,000 in your bank account, you only have $4,900. And what you'll do is you'll keep going with this, and at the end of the month, whatever that total is at the end of the month, that's what you're going to send back to your balance sheet and your closing preparation statements. And we'll get into that in another video. But now you're kind of getting the idea of how this system works. Remember, whatever you put in the general journal, you also have to put in these ledgers. And there would be a ledger for cash. There's a ledger for capital, one for prepaid rent, one for supplies, one for miscellaneous expense, and one for accounts payable. And we could go on and on. But now you're getting the idea. On a journal, the posting reference is the ledger accounts. 100, 300, 101, 100, 102, 200, so on and so forth. In the ledger, your accounts are 100, 200, so on and so forth, but your posting reference will be the page in which the transaction actually occurred. Alright, I will go over this further in a future video. Stay tuned.